Good morning, Dale.
Hey, good morning. How are you?
I'm just peachy, and I'm sure a lot of other people are. How are you doing?
Well, it's Wednesday, not Tuesday, and we have announcements from the Fed.
Yeah, and the main reason we didn't do this on Tuesday is because today's Fed's Day, where they made the announcement of a 50 basis point cut, or in layman's terms, a 0.5% reduction in the federal funds rate. So, Dale, real quick, what is the federal funds rate, and why did I not say mortgage rates?
So the federal funds rate, or the overnight lending rate, is the rate that the Fed charges other banks to loan money. It does tie into mortgage rates. They are tied together, but they are not the exact same thing. So therefore, you're not going to see an immediate 0.5% lower interest rate across the board. It just doesn't work that way.
Well, okay, so that's actually interesting that you just mentioned that, because here's a mortgage-backed security chart. Green and up is good, red and down is bad. And today we are right here and we are seeing red. Now, you might be thinking, oh, you took this before the announcement. It's like, no. I took this screenshot after the announcement was made. And if I'm an investor in mortgage-backed securities and the federal government just said 0.5% decrease, you would expect a 50 basis point rise from this point, right? Well, so Dale, if I'm looking at interest rates today, average, all discount points, all down payments, whatever, 6.2%, next week, everyone should be getting 5.7, right?
Well, logically, yes, but the short answer is no. It doesn't work that way. In fact, you'll remember we talked a couple weeks ago, many investors have already baked in this cut into their pricing, anticipating that it would happen. In fact, some of that red you're seeing on the mortgage-backed security might be investors going, oopsie, we discounted a little bit too much and we got to rein it back out here. So we're not going to see a 0.5% drop between today and tomorrow. It's already dropped. It's already there.
Yeah, so we'll explain that a little bit further, but let's talk about what's next, because if we're going and we're looking, okay, we're at 6.2% this week, we're probably going to see a little bit of an adjustment down because we've seen a nice downward trend for the last month, and it's been very good. I do want to point out one thing, Dale, take a look at the discrepancy between the 15 and the 30. It is almost a full percent different. That is huge. Yep. That is big. Normally it's like 0.5% to 0.75%, but for a full percent, that means this is a huge incentive to try and get a 15-year mortgage. So something to keep in mind. And if you're thinking, oh, I don't want to double my payments, you have to watch our 15 versus 30 video, because it ends up only being a few $100 rather than doubling your payment. So what's next? Well, our Fed meeting took place September 17th, 18th. The next one is going to be November 6th through 7th. This is the next opportunity most people believe the Federal Reserve will make another decision. But that's in 2 months from now. And we don't necessarily have a projection of which way they're going. We have hopes and dreams and aspirations. But Dale, are we going to continue to see mortgage rates decline? I mean, what's going to happen between now, September, and then in November?
Boy, that's a loaded question, and we could go on for years. But the reality is, I think it's all going to depend on market reaction and how things go. Does the market get a little better? Does the market get a little softer? What is the economic outlook? That's all intertwined. So I don't think we can really accurately predict what's going to happen in November without at least watching all the economic trends for the next month and a half.
I will put this. I am going to put a gamble that next week when we do our market update, we're going to talk about this exact same thing, but we're going to reflect and say, wow, that was a week of market volatility. The Federal Reserve dropped interest rates, yet mortgage rates went slightly up or slightly down and all around. So I think it's going to be more towards a volatile market until we have a clear definition of where things are heading, so that then lenders can bake in and hedge their bets on the next rate cut. And I do want to point this out. The market predicted this at the beginning of September. If we take a look at this chart right here, we had a slow rise at the beginning of September, all this green, and then a stagnation. And that was around 101 basis points, just a little bit below that if we take a look at it. And if we take a look at this stochastic line right here, 101.52, it just so happens that it's about exactly a 50 basis points bettering on mortgage-backed securities that was predicted weeks before the Federal Reserve actually made their decision. So this is what we mean by hedging bets.
Amazing how that works.
Yeah, it's like people kind of know the system before everyone else does, and decisions can be made on a whim.
There you go.
Yeah, it almost feels like there's an illusion of choice. So, all right. Well, that about wraps it up for today, unless you have any other inspiring words for us. Actually, I remember. It's been about an hour as of the recording of this since the Federal Reserve made their announcement. Dale, how many phone calls have you gotten from clients and buyers and refinanciers saying, I would like my 0.5% discount, please?
A few. We'll just leave it at that, a few. I had, in particular, one saying, we locked in the loan, now we get 0.5% better. Is my rate going down? And the short answer was, no, unfortunately it's not. Not because it's locked in the loan, but because rates are still the same as they were yesterday when we locked it in, because it's already been baked into the pricing.
Yeah. So, and this harkens back, hedging bets. On the next rate cut, if you're a buyer and you're watching this video, really, really watch that hedging video, because what's going to happen is you can get into the housing market 2, 3, 4 weeks before everyone else and put an offer on that home before you start bidding, because, well, now we're seeing it. Buyers are coming out of the woodwork. So.
Yep.
All right. Dale, thank you so much. I appreciate your time, and I look forward to the next one.
Have a great week.
You too. Bye.
Bye now.